Hello, Trade Pros. Good morning. Hope you guys are doing well. Sound check, 1, 2. I'm on my mobile phone today. I want to just be able to walk around. I might have to run downstairs and open the door for somebody. It is a holiday here in Canada, so it is Monday, February 17th. It's Family Day. And I figured I'd spend some time with you guys, my family, and talk about trading and answer some of your questions, inquiries, and concerns. All right. Markets are not, well, stock markets are closed. The futures market's open. But like I've told you guys, there isn't really much to trade here. I'll show you. I'll rotate the camera. Hi from Holland. Hello, Ad. Hello from Holland. I'm going to spin this camera around. You can see, like, legit, there isn't much to movement. So we look at this chart. This is called the 5-tick chart. And from about 119 this morning, we've stayed in a range of about 3 points. All right. And you can see not much movement at all. And this is why I like tick charts, because if you look at it, you know, if the price is not moving, the chart isn't going to form a lot of candles. So you know this is a market that's not really opportunistic. So anyways, what we're going to do instead is just answer some of your questions. All right. And there's my workstation. By the way, up top here, I look at news. So this is a platform called Rand Squawk. We have an opportunity for members to save a lot of money from TradePro on Rand Squawk, almost half price. Here's some stuff that I have on TradingView, some other things I follow, some motivational quotes and stickies, okay, which I absolutely love. The book I'm currently reading, Dollars Flow to Me Easily. Love this book. How I got here. And these monitors here, I usually look at, this is S&P, this is oil. Up top, you have other markets like NASDAQ, a quote board to look at the volumes. Okay. And the DOMs. These are the price ladders, which are currently in sim because I don't plan to trade at all. Okay. And you guys shouldn't. So let's walk over. We got our office organized, by the way. Look how nice and clean it looks finally. We're putting up a nice TradePro sign up here. Got some organization done. Look at this. I love this cabinet. It's from IKEA. And then back here we have our podcast studio. This is me riding my motorcycle in Tennessee, right here with the camera on my head, and that's my buddy in the background. Good morning, everyone. This is Jeff trailing behind. I'm not really going too fast, but it's in Tennessee. This is Deals Gap, Route 129. In 11 miles, there's 311 turns. So one of the most fun trips I've done. And then, of course, here's our podcast studio in the back. So where Mark and I record our podcasts. I used to love audio from before, you guys know, because we read the book. So setting this thing up was kind of was fun for me in more ways than just getting a podcast studio. So let's go to our meeting room. I'm going to sit down and answer some of your questions. Hope you have some prepared. We'll run about 30 minutes or so. Here's our meeting room. All right, here's our corporate values. You guys think sometimes that we say that we care about you just because it sounds fashionable, but look, this is what we believe in. We care, customer wowing. We hope to wow you. Wow, that's what we're going for. Exceptional quality, passion for innovation, community-driven, results-oriented, humble, friendly. Teamwork makes the dream work. Love that one. All right, so I'm just going to sit here and flip the camera. Let me just set it up real quick and start answering some of your questions. So go ahead and post them below. Just give me one moment. And this should be pretty good. I don't like how it's so zoomed in on my phone. But hey, you don't always have to like everything. It's pretty good. Looks pretty angelic. Let me go on the other side. All right, what questions do you guys have? Questions, comments, concerns, emotional breakdown. I'm here to answer your questions today. We'll spend however long it takes. I'm gonna have to scroll through here, so pardon me. Hello from Holland. Hello, Red. Will, good morning. Angela. Hello. What questions do you want to know? I can answer anything regarding trading. What about ETFs? Do you use TD to trade? No, Dane. It's a very specific question. I don't use TD to trade. I use a platform called Sierra Charts for my day trading, and then for my shorter or longer term strategies and positions like swing trading, I use interactive brokers. I don't use TD Ameritrade, to be honest with you, but there's nothing wrong with it. If you're gonna day trade though, you certainly can't use TD Trade. TD, their data's not good enough for reliable day trading. What about ETFs? What about them? I use ETFs to structure portfolios. So I do have a portfolio approach as well. I day trade, but in addition to that, I'll do some ETFs to put together a well-diversified portfolio that strips away the risk. So yeah, they definitely work. Hello, Tian. Pele, hello, brother. Happy Canada Day to you. Or Family Day, rather. To all the people here from Toronto and Canada, happy Family Day. Next year will be a bigger family. Do I track the volume on the dark pools and the SPY to give you extra edge in the ES? I don't, Red. We trade futures on the ES. And so when you're looking at the futures, all the data is there. Whether you're trading a dark pool, if you're trading an algorithm, whatever you're trading, you're going through the CME exchange, and then that's showing up on the order flow, which is why order flow is so precise. It's because you're looking at every single order, how it flows through the book. All right, you can track the changes of it and a bunch of other information that becomes super helpful and useful. And gives you really good precise entries. So no, to answer your question, I don't track dark pools, never have. Do you? Does it work? Hello from Panama. Hello, Luis. What's the best for day trading stocks or futures? Someone told me to check out futures for intraday. Should I? Yes, you absolutely should. Futures allow you to use very little capital and to enhance your returns. You're gonna have to emphasize risk management though. So if you're a really good risk manager and you know how to manage your capital, or you know how to take a loss, you don't have a problem, getting out of a losing trade, admitting you're wrong. Futures far surpass stocks or any other product in terms of efficiency of capital usage. With very small money, you could move large positions, which is a good thing if you know what you're doing, but a really bad thing if you lack discipline on your approach. So depending on the answer to that, you got to be honest with yourself. You got to be brutally honest, and we go from there. David, do I still swing trade Forex and stocks, or do you just do futures at this point? I don't do Forex anymore, David. I mostly trade futures right now, and then some ETFs in my longer term portfolio, and then I swing trade futures also. And so, because of the capital efficiency, because markets are open 24/7, 24/5 in futures, in ETFs and stocks, markets close, and that makes it really hard for you to manage your risk. If something happens, especially on a news-driven market like we've had these days, something happens and you can't really control your positions with stocks. All right, you're exposed to this gap risk. Whereas with futures, they only close for 1 hour a day. They open on Sunday at 6 p.m. Eastern and close Friday at 5 p.m. And so because of that long availability window, first of all, it requires less margin. Second of all, you're able to hedge or adjust your positions pretty much at any point you need. So I pretty much stick with futures. Can you get order flow on MT4? Oh, you guys, hang on. I gotta go downstairs. Hold the questions for a bit. Actually, I'll answer them as I go. This is why I went on the phone today, because I gotta pick up Justin. He's coming in on a day off. He's a grinder. Hello from Russia. Hello, American expat. Let's go get Justin. Let me flip this so you can see where we're going. So you don't be all up in my face. Good idea to use TD Web Broker in Canada. My long-term investment, you give for sure, use IB. Whatever works for you, Rami, honestly. For longer term, sorry guys, I lost it. We lost Wi-Fi. Yeah, exactly. Bye-bye Wi-Fi. Hang on, I'll get to the questions in a second. Just gonna get Justin here. He doesn't expect to be on YouTube, but teach him to expect the unexpected. Look at him standing out there. Yo, you're on YouTube. We're doing a question and answer session with the good peeps of YouTube. You want to answer some of the questions?
Can I answer some of the questions?
All right, you lead the way. Let me pick up a question to answer as I walk. What's your risk to reward ratio?
Oh, that's a good question.
Yeah, or what's a good risk to reward ratio that you would recommend? Okay, so what I do is I use a stop loss for futures trading, by the way. So if you generalize it, I think 1.5 return to 1 unit of risk is pretty much the bare minimum. So if you're risking $100, there should be a statistical edge or a high enough likelihood that you can make 150 at least. So 1.5 to 1. With futures for day trading, I use 5-tick stop loss on the S&P and an 8-tick profit target initial, and then I run the balance. All right.
What about 2?
Huh?
What about like 2, like 4 to 8?
4 to 8, like 2 to 1.
Yeah.
2 to 1 is a good ratio also for swing trading or longer term trades. That's not day trading. I could even shoot for 3 to 1 because on swing trading you have the availability to be more patient. All right, on day trades where you're not riding redundant cycles, right? You got to get paid quicker. All right. We made it back to the office. Let me sit down and answer some more questions. Whew, I gotta go to the gym. I got tired from that, Jay. Walking and talking is tiring, man. Don't laugh. Don't laugh at me. All right, so Justin's here. We're gonna work on this trading a little bit today. Let me look at the questions once again. I hope that answers your question. Do I use level 3 quotes in your trading? Yeah, absolutely, Bernard. We go way deeper than level 3. It's like level 5 almost. We use a lot of order flow and we use the book. So if you look at a price ladder, all right, the price ladder is intention. So a lot of people use level 2 quotes. So I could show this to you on the board. Let's go with the green marker. Okay, so like on the price ladder, you know how there's bids and then asks, then you have a whole bunch of numbers. All right, this is what we call intention. So just because somebody puts an order in on the market doesn't mean they are they want to execute. They intend to execute, but doesn't mean that it's going to actually clear through the market. Another thing we use, something called a footprint chart. We've done a lot of videos on them. All right, and they show you the actual traded volume on the bid and the offer. So when you compare intention to trade versus what's actually traded on the market, that comparison gives you enough of an edge to be able to execute some really clean, high probability, low risk trade setups. All right, let's look at the next question. Hello from Costa Rica. Hello, Miguel. Morning, Jim. Happy Family Day to you too, if you're celebrating it. Morning, Donald. And I think I've gotten through the questions. I don't know if I answered the one as much as you would have wanted me to, the one about risk to reward. But to answer your question, you want to have at least 1.5 unit of return for every 1 unit you risk. If you're day trading, if you're swing trading, you want to get to at least 2 to 1. So for every dollar you risk, you want to start taking profit initially at least 2 units of return. Think about this. It's all about getting paid early. The worst thing for you is to have a trade go your direction, hit your profit target expectations, and then curl back down and then hit your stop loss to get you out at break even. Right? The worst thing in the market is giving back profit. All right? Most people don't actually have a problem making money while they trade. They have a problem keeping it. All right? That's the real challenge and difficulty in this market. So for day trading, go at least 1.5 to 1 return to risk, and swing trading, go try at least 2 to 1 for your initial target, and then run some units to try to go 3 to 1, 4 to 1, etc. With one swing trade, if you catch it nice and it's a nice trend, you can make really good returns. It also depends on the trend. If it's a consolidation, there's no point of running any additional units. Take full profit. Right? But if you got a nice trend like we've had in all markets, it makes sense to take profit at your initial target, scale your stop loss up to break even, and give it a shot for a runner. Hello, everybody. My comments just got all screwed up. All right. When was the last time you broke your trading rules? Can trading instincts be taught? Last week I broke my trading rules. All right. And so, here's the thing. You're going to make rules, and there's people who teach trading to be emotionless. The only time you're going to be an emotionless trader is when you die. All right. You don't want that to happen. You're a human being. You're going to have emotions. It's impossible to fully remove emotions from this business. And if being able to remove emotions was teachable, the market wouldn't exist. Because what we are trading is other people's emotions. All right. So the emotionality actually creates an opportunity for us. So because human beings are emotional, markets are emotional. Okay? Because markets are just, at the end of the day, human beings transacting with each other. And so they get emotional about price, they get emotional about money. It's one of the most emotional aspects of life. Why? Because we're not taught about it from an early age. Right? We're taught about working for people, but we're not taught about what to do with money and how to manage it, right? Which is very ironic, isn't it? So to answer your question, yes, I break my rules. The goal of trading is not to never break your rules. The goal of trading is to have rules to begin with. And when you do break them or realize that you're kind of starting to twist them a little bit, all right, you recognize that very fast and you take corrective action. The goal is not to be perfect. The goal is to have a feedback mechanism and be very responsive to your style of trading. All right, you have to be very aware, present. Do a lot of self-analysis, which many people aren't taught to do that. All right, we're taught that our evaluation is done by someone else, right? Our boss, whatever it is, which is a very big downfall in life, and people struggle with trading because of that. When trading, I noticed that you do it in single lots versus going multiples, even though you could put multiples on the same level. Do you find that you have more control for this? Yeah, Chris V, that's a great question. I like to use multiple, like if I want to get filled on 6 lots, obviously I can't go 6 levels of 1 lot each, because then the 6th one is going to be right on the stop loss level of the first one, right? If you layer it 1 lot at a time. So what I like to do is spread my trades over 4 ticks, meaning in the S&P 500, 1 point. So if I want to do just 4 lots, I'll go 1, 2, 3, 4. If I want to do 6 lots, I'll go 1, 2, 2, 1. All right. I want to do 8, obviously 2, 4, 6, 8, etc. I scale it up. So I do put multiples on one level when I'm going bigger than 4. Lately we've had a lot of initiatives going on, TradePro Academy, and so I haven't traded as big size. I used to do 12s, 14s, 16s. I'm down to about 6 or 8, and I find that's enough because the market's moving a lot. With a smaller size these days, you could make really good money without having to really leverage it up. All right, so for new traders, it's an ideal time for you to start. Ramy says, I only use the DOM for placing orders, but other than that, I cannot really get some good information as it's too fast. Ramy, watch faster. What I recommend for you, Ramy, is to look at the DOM in the evenings if you could spare some time, or you could replay in Sierra Charts, which is why I love the platform. You could replay the day and replay it at half speed, and you'll watch the DOM move slower. It's very important to learn how to read the price ladder or depth of market. There are proprietary traders that can only trade you based off of that tool. We have to understand that every single thing, every indicator, all right, every tool, every analysis method, trend lines, everything that we could draw on a chart, all of that comes second to the DOM, right? Before a trade hits the book and it's transacted, it goes on the DOM. The DOM is always step 1, so it's a disadvantage to not know how to read it, right? And it's not difficult, you just got to put some time into it, and I would tell you, Randy, to put a pretty big focus on reading the DOM. If you have to slow it down, go to replay mode, all right? Slow it down, but notice how the numbers are changing, notice the inventory levels, etc. All right, everything we've taught you in the course, because Ramy, I know you remember. Do I fully cover my position at 8 ticks or do I have a partial profit? More ticks as you disagree. Yeah, so Rock Outfitter, it's a very good question. Do I take full profit at +8 or do I run? A lot of that varies on the context of the day, all right? Rock Outfitter, so we start trading at 9 a.m. In the morning every single weekday. And so, Ricardo, I'll show you in a second, I'll get to your question. All right, so if the overnight range was very thin, like 4 or 5 points, all right, looking to get more than 8 ticks means I'm trying to capture more than half of the previous overnight range. And as you know, that comes with a degree of risk. That comes with the assumption you know where the market's going. As a trader, I don't know where the market's going to go. All right, I never have and I never will. I just know what I'm going to do about it based on seeing the real-time info. So in the context of the day, if we got a pretty narrow range, I'll probably stick with a +8 until I see some volatility break or we break out the overnight high and the overnight lows, which is why it's so important to map them. And if on the flip side, I wake up in the morning and there's a 40-point range overnight, you know, +8 is an initial, then I'll run the balance. I like to get out on thirds. 1/3 out at 8, all right? 1/3 out at 16, and then the last third, I'll run it by trailing the stop, right? So you have to, when you come up with a strategy, this is the one thing that's interesting with traders, you come up with one strategy and say, I got it, I got a strategy. It's great to start, but what you really need is multiple strategies. A strategy for consolidation day, right? A strategy for a wide range that you think it's going to momentum trade. So understanding what strategy to pull out when, all right, and what defines the days that you're going to trigger that strategy with, because that's what's important. And that's how you start to optimize your profit. At the beginning, when you're new, it's okay to have one strategy. You're going to just be waiting more patiently to get, yeah, Jay's got one strategy, right? And Jay, just wait for it.
Pullback.
He trades the pullback, and he just waits for it. What happens if you don't get a pullback? Then he looks for a breakout. So he's got multiple strategies, but he's more patiently waiting, understanding that, look, when you're first starting out, what's important is to be consistent, not to take every trade. You're not a trader when you're in a trade. You're a trader all the time, right? Traders don't look for trades. Traders look for good trades. Huge difference in the approach and your results if you follow that method. What's that? At every moment? Yeah, there you go. Jay brings up a good point. Said he attended our boot camp. He said there's money to be made and money to be lost at any given moment. There's no rush. Another train is always coming. Another bus is always coming. You know, there's no need to chase the bus. Just relax, go get a coffee and wait for the next one. All right? You're most welcome, Rock Outfitter. That's a fantastic question. What is the DOM? Hold on. How do you know when it's short? I'll follow the questions in order, guys. I want to give you full explanation, so hang tight. I'll answer them all. How do you know when it's a short or just longs unloading? Red, it doesn't really matter. You really don't, right? A sell order is a sell order. So if somebody puts in a sell order, how do you know if it's a long position unloading or getting dumped, right? Or if it's a short entering into the market? Let's take this to the whiteboard, right? Because it's a fantastic question. All right. This time I'm going to get a red one because you asked. All right. So let's say we have a level here. Okay. Whatever this level is, for whatever reason, we're going to call it, it's a juicy level that we like in the market. All right. It bounces around this juicy level. There's a lot of longs getting in at these lows. All right. Retail traders might even be getting long here. And then the market dumps. Where are all the stops? We know it's below this level. Below this level, we know there are a bunch of stops, right? So if we go below this level, what happens here? The longs are puking, so they're losing money, and the shorts are shorting for the breakout. They're making money. So at this level, they're selling from short sellers and long sellers. What happens if price comes back up? All right? Whether you're short and you said, crap, I had money, now I just lost all of it and I'm break even, or you're long and you said, I got out of my trade and now it's come back up, what are you going to do? You're both going to flip to buying. So whether you're long and dumping your stop or if you're short trying to make money, price action doesn't care. It's still shorts getting stuck below this level, all right, and they're right below this level. Sorry, shorts are getting stuck above the level, they're right below. Because down here, shorts are happy, All right, but so too are longs that got stopped out. Why are they happy? Because they use the stop and they're not long still. Right? No matter what happens as price moves, whether you're short or long, stopping, it doesn't matter. It's the same action. It's the same meaning. Somebody asked what a DOM is. Let's keep the energy going. I don't want to sit down on you guys. This is the DOM. Who asked that question? Ricardo. This is the depth of market. So on the left-hand side here, okay, you see buyers lined up. So the price is down the middle. All right, this is your buyers and how much quantity. So right now at 85 even, you have 209 buyers intending to get long. It doesn't mean that they're going to do it. It means that at this level, there's going to be some support. On the upside, you don't really have too much sellers until you get all the way up to the 33.90. Right? So you could already see the market's in between two really big liquidity points. And that information is super important. All right? You're welcome, Red. Does that make sense though, Red? How it doesn't really matter whether you're long or short, whether you're long getting out or getting in a short, it's the same thing you're selling. And at the end of the day, sellers get pissed as price goes up. Craig says, I just want to thank you, Mark, and Victoria for the content you place on YouTube. I find it very useful. Thank you so much, brother. I appreciate you. We're going to keep going. I know Victorio and Mark have been doing a lot of great content. I haven't been on it as often. Okay. But I will be making some more videos with you guys. We've just had a lot of different initiatives going, and I just spread myself too thin. All right. How's that illustration over there? Any other questions, guys? We're going to go for another 5 minutes or so. No, I don't, Red. I don't trade equities. Not that I haven't, but I haven't in a very long time. So yes, I have in the past, but I just, it's very equities. What I don't like about equities is that it's very company specific. So if I like one company, that company could move way outside the realm of what the market is doing. The market could be up, the CEO could be embezzled in a sex scandal, and the stock dumps 30%. All right. So there's very high single stock risk and exposure, which I don't like with equities. And so I don't trade them as much. Also, it takes a lot of capital. It ties up your money. And I can be way more efficient with my capital than buying one share of Apple. Put that in the futures account, even one stock in Amazon. All right. If I have one share in Amazon, it's almost $2,000 a share. I put that in a futures account. I could get 3 contracts along on the S&P. All right, 3 contracts on 1 point's $150. All right. So, point I'm making is it's more. So look, I got to differentiate this. There's day trading and then there's longer term trading. So, if I wanted to do longer term investing, stocks could make sense, but I mostly focus on day trading. So what I do is I day trade, I build up cash flow, I withdraw the money, and then I buy property. So I like to invest in real estate in my portfolio and turn it into a hard asset. All right, it is a family show, but as long as people are having sex, there's going to be a need for rental properties, right? Like you're going to need to live somewhere. It's just the reality. And so, hopefully you guys are, because I have some properties. Having some fun with you guys. It's Monday. It's a holiday. Can you discuss how you look at volume on the 10 ticks and 5 tick to qualify your trade? Sell. But by the way, Red, since you asked a good question, if you like equities for the long term, go for it. You don't have to be a real estate investor. This is what I prefer because I'm in the markets on a daily basis. I want to have a little bit of separation from my assets. You know what I mean? You don't want all your money to be in one basket because it could get dangerous. Let's say you have a really bad trading day. Will you allow that to now convert into the way you manage your portfolio? Because they're so interconnected. Whereas if I have a bad trading day, what am I going to go do? Sell one of my properties? It's a lot harder. It's not as liquid, and that's what I like about it. Yeah, there go the YouTube monetization algos. Yeah, Sal, volume has to confirm the move. Sal, there's another whiteboard moment, Sal, my man. You guys are creating a lot of whiteboard moments. But first, let's wipe off what we've already written, all right? Take a picture of this greatness, because in 3 seconds it's going to be gone. Hey, I don't know if John's here, but he wrote us a nice note. And we love when our members write us cool stuff. Let's use, let's use a blue pen, because we ain't used it yet. All right, so volume. Volume is your gas pedal. If you have a car moving forward, Sal, all right, and the gas pedal's let off, so there's no gas being applied, do you expect this car to continue moving forward? Right? Yeah, probably for a little bit until it loses momentum and stops while the gas pedal is not being applied because the gas is at 0. All right? But what if you have a hill coming up with your car? Then you know you're going to lose speed even quicker. You're going to need more gas to get over that hill. It's the same thing with volume. As the price is going up, if you're in an uptrend and looking to qualify a bullish trade and you're on a pullback, you're saying I'm going to buy it, put my stop loss below. What you want to see is volume track upwards with the trend and then be lower, decreasing on the pullback. When you get in and it breaks and it continues to go, you need to see a nice volume bar. If you do not see that volume bar, this could be a head fake breakout. Take your +8, be out because the dump is coming. All right, so volume confirms the price always. My battery is running low. I'm gonna have to get in here and put on the charger. Hang on 1 second. What side's the battery? Just for a little bit. Let's see some other great questions. Flip the camera. All right, damn, that was really close. Why do I like real estate? Because it's over $1,000 a square foot in Toronto. That's the real answer. I love it because, number one, you know, you're gonna have to live somewhere, so why not own the place that you live in? All right, I know that people are gonna say, look, if you could make 20% a month trading futures, why the hell would you own property that returns 10% a year? All right, and the answer to that is scale. If you have $300,000 in your trading account, day trading, you're gonna hit a scale that's unbelievable. You're gonna probably be able to trade, 100 lots. I'm not comfortable with that. I don't want to put $4,000 or $5,000 of risk on 5 ticks. I'd rather take that money, park it in real estate. All right, it creates rental income, which you could offset a lot of expenses against. All right, and you build an empire. You have kids later on down the road. You have something to give them. You have the option, the availability. Once it's paid off, it becomes complete income. So the way I look at it is real estate gives me a level of confidence where I know if everything goes down the tube, if it goes down the shitter, all right, I have some income to protect me against anything else. All right. And also, once you make the investment in real estate and it returns X amount of dollars for you, you could refinance it and put it into another property. Of course, if the market goes down, that's going to take a hit against you. In Canada, you can only refinance up to 80% of the value of the property. So let's say you have a $600,000 condo. Let's say you have an $800,000 condo, because I do. And that's the context of where Toronto's at these days. I think it's crazy. I don't know how much longer this market could go, but you could take 80% of that 800,000, receive the loan minus what you owe, all right, and you're sheltered against a 20% drop. In the event it happens, you're still not underwater, right? In Canada, we can't have 100% loan to values, even on commercial deals. Okay. Oh crap! I have to put on my Wi-Fi. Yes, Dane, it's a good question. I cut out for a second. I don't just trade the ES, but I do mainly trade the ES. And just because you trade the ES doesn't mean it's the only market you have to follow. In fact, since we're here at the computer, let me show you what I do. All right, you'll see these lines over here. Do you see them, Dane? purple, the green. So the yellow here is the Dow Jones, the orange is Russell, green is the S&P, purple is NASDAQ. All these markets are correlated. So when we talk about intermarket correlation, you might trade one asset, but you got to follow all the correlated assets. Below here, green is the US dollar, brown is bonds, 30 years, gold is gold, and this red is the yen, which is showing up pink on YouTube. It's odd. I think it's a camera lens. So these are assets that should move against equities. These are the ones that should be moving with equities. You see the S&P is on a little bit of a downswing, but NASDAQ is leading the way down. Now the market's very thin today, so can't really show this as a demonstration lesson to you because look at it, it's barely moving. All right, but you have to follow different charts. Look at this. What happens if you go to Google and type in floor trader? I'll bring it over here for you. I'm going to show you this lesson because it's super important. This is how these guys used to make a ton of money. Pit traders. All pits are now closed in the US, but I mean, it serves a purpose. All right. Let me find you a good example. All right, here's a good example. Here's a picture of the trading pit. All right, where's this guy looking? He's looking up. Where's this guy looking? He's looking up. Where are these guys looking? They're looking up. These two guys are talking to each other. They ain't trading. All right, look, this guy's looking way up. All right, you know what's up there? Let me show you another picture. What's up there is quote boards. All across the trading floor in the CME, they have quote boards. What do they look at? They look at quotations of intercorrelated markets, understanding how one moves and why it moves. And correlations are important because even though I'm trading the S&P, if I see NASDAQ is ripping way higher, that's great. I have more confidence in my S&P long. If I'm long the S&P and NASDAQ's falling off a cliff, they're intercorrelated markets. This tells me my long trade's in danger. So these correlations, even though I trade mainly the S&P, these correlation markets help me capture the upside and stay in trades and help me disqualify trades equally. All right, so that's a very important question. Very, very, very important. You might trade one market, but you got to follow them all. And also, this is why I have a quote board here. All right, different assets, etc. Does that answer your question? This is a great one. That's funny. Clearly you don't come to the channel often, Jack. That's cool. Do you have a recommendation for books to read about real estate investing, long-term portfolio building, and retirement investment planning, especially in Canada? No, Rami, to be honest with you, books don't really, I've learned very little valuable lessons for investing out of books. You got to kind of learn it through the hard knock university, which is just real life. I remember when I went to buy my property in Toronto in 2012, I was like, wow, this could be a market top. And everyone's telling me, why would you buy it? All right. There's no way it's going to continue going up. And I'm like, look, it's because it's not going up and people think it's not going up, it's going to continue to go up. All right. Those same people that didn't buy in 2012, being afraid of a 20 to 30% pullback, missed 300% plus growth in the market. All right, so it's kind of like investing in stocks. The fear of a small pullback always prevents you from making a lot of the upside money. And so when you look at the housing market, when people are telling me it's way too late to get in, prices are way too expensive, you're crazy for doing it. I started investing in the real estate portfolio back then, 2012, and adding along the way because those people need to live somewhere, right? Ideally, everyone would like to own the place they live in and pay rent to themselves, all right? But if they're afraid of it because they think it's gone up too high, those are potential buyers that haven't bought yet. All right. And I loved hearing that. Even to this day, you know what? Prices are way too high. When everyone comes in and says, you know what, this market's going to continue to go up and no one on the street's afraid of buying property, that's when I'm going to sell one or two, cash in, generate some cash for the pullback, and then start adding again. All right. Does that make sense? But in terms of books, I don't know. To be honest with you, I haven't read any books. School of Hard Knocks. Just get long. Protect yourself. Thanks, Bobby boy. Hope you're doing good, brother. We miss you. What are you guys going to sell someone TradePro shorts and gear? I need some. Jake. We have them, man. Look, you want to see some of them? We have them. We just haven't put them to market because we got to set up a whole e-commerce store and that becomes almost a separate business. All right. But I'll tell you what, we'll get working on it. This is the one that I like. It's my favorite one. It hasn't worked lately though because markets keep ripping. But on here it says the front says STFR, sell the F and rip, with the left sleeve, TradePro Academy. So we are working on some stuff. We're gonna get some gear, I promise you, in 2020. I'll tell you what, I'll start looking at it again shortly. If you use range bars to assess market structure, what is the tick size equivalent to looking at daily or weekly view? See, Peter, that's a really hard question to answer. There is no answer to that question because, this almost creates another whiteboard moment. Because what happens is time charts print a 5-minute candle regardless of what happens. If 5 minutes pass, a new candle prints. Tick charts only print when there's X price of movement in the asset. So if you have a day where the market doesn't move at all, you could have 4 or 5 tick bars. And if it moves a lot, you could have way more tick bars than you have 5-minute bars. So looking at non-time based charts means that you're looking at trend-based charts. Trend-based charts help you see the trend. Time just helps you tell the time. You get a watch. You can tell the time a lot more efficiently. You don't need a time candle to tell you what time it is. You need the candles to tell you how much volume is there and how much price is moving in any given tick increment. And this is why we use non-time based charts. Super important for your trading. You'll see the light in a whole different way if you apply them. Bobby, thanks, brother. Appreciate it, man. Yeah, we're really excited with the wife. Big 2020 for us for sure. Forex futures, can COT report help for direction? Absolutely, Silvio. We use the COT reports. We analyze it weekly in our subscription in our market analysis live webinar. What time frame do you use to day trade on? Dane, I don't use a time frame. I use a 10-tick chart. Damn, I gotta get a haircut. I never look at myself other than when I'm on YouTube. I don't use time trades. I use a 10-tick chart. I'll show you very quickly on my setup. All right, I use a 10-tick chart here, which means that for S&P, it's 2.5 points of move will print the new candle, and down below I use a 5-tick chart. So look at this. Since midnight, all right, or since 6 p.m. of last night, we've had these candles only on a 5-tick, barely any movement. On a 5-minute, you would have had a ton of these because a lot more 5-minute time frames happened than 5-tick price movements. So looking at this automatically tells you, look, it's going to be a choppy, slow day. It's not worth it. We know it's a holiday, so I wouldn't trade on this day at all. But you're looking at this saying it's a very slow market type. Maybe instead of running for 16, 24, 30 ticks, I'm going to be happy at +8 because there isn't much movement. But if you had a 5-minute chart, most of the data would be over here. It'll be lost because you'll just be looking at the last couple hours. All right. So it's super important to follow non-trend based or time-based charts. All right, let's look at some more stuff, more questions. Cold showers coming, Jack. How did you master discipline, patience? How to have a winning attitude when you have a losing streak? How do you have a winning attitude when you have a losing streak? That's a good question, man. That comes down to trusting your analysis and your system. If you've back tested enough, you've traded enough, you have to have trust in yourself. It's like, how do you come back on any other? See, trading is no different than any other job. It's very different, but in terms of the discipline, how do you come back day after day to a boss you don't like, right? You kind of just do it, right? But in trading, if you have the data set, one of my best comeback is if I ever have a bad day, and I do have them, all right? Happens. If I have a bad day, I'll review my trading journal and look at the best trades I've taken in the last week. So rather than dwell into this negativity mindset, look into what I did to make one of the best trades happen in the last week. Review that trade, all right? Review the qualifiers, review the mindset that happened. That's the importance of keeping a journal. If you don't keep a journal, that's the first thing I recommend. All right, go back and review those positive trades. That way you flip your mindset to be positive seeking rather than dwelling in negativity. If you dwell in negativity, negative results will happen. Whatever you think is what you create. So if you keep reviewing the negative trades for learning opportunities, all you're going to do is find losing opportunities. If you review the positive trades, even though from the positive ones you think there's less to learn, you're learning the most out of reviewing the positive trades. All right, so I'm a big proponent of that. All right, I want to get through these a little bit quicker. Let's wind it down. You can watch the replay. It's live, but it's a replay. I can't pause for 10 minutes. Go get the kids, bring them back, and watch the replay together. No, I wouldn't trade today at all. Even at Asian and London sessions, I'd stay out of them. There might be some opportunity, but it's just too slow. I'd wait for one US session in full before I start going. I'm really considering joining TradePro. However, I'm looking at TradePro up firms like TS Trader. Would I be able to go all I need to know to pass a combine? Drin, we've got a lot of people qualified through our education who now are funded in trading as funded proprietary traders. What we teach is exactly what prop firms look for. So it's not, should I go to a prop firm like TopStep or should I go to TradePro? You could do both. Start with the courses at TradePro, get a little bit of foundation, and then go into TopStep Trader. TopStep's actually a partner. We refer people that want to get funded to them because they're honest. They will fund your account. There's no BS. We know a lot of the guys that work there. They're former floor traders, really good guys, and they're not about BS. They fund you. If you meet the requirements, even though they're stringent, you get funded. And so, yeah, we've had people get funded from TopStep on a regular basis, and it's great. Save yourself some reset fees. Because understand this, if you reset 5 times, that's like $500 and some odd of capital you spent. You could now trade one ES contract for yourself. When they tell you you have a $50,000 account, right? You don't actually get $50,000. You get the availability to buy 5 S&P 500 futures contracts. You only need $2,000 to do that to begin with. All right, so heads up on that. We used to have a big vision to create a prop firm. And the biggest downside to a prop firm is the traders I would want to fund the most need my capital the least. All right, that in itself is a conundrum of prop trading. There isn't much of a difference between a 4 and a 5. No, 4 is a little bit cleaner when it trends, but also a little bit sloppier if it's sideways. Rami, we do have plans for that. We'll keep you guys posted for a swing trading futures newsletter. Yes, exactly, Mark. 2.5 points on a 10 tick and not 10 trades. It's actually called the range chart. All right. 2.5 point range chart, but 10 tick range chart. Ticks is actually a true tick chart is like how many trades happen. So yes, you're right. If you want to try a tick chart, try 2,000 trades on the S&P. Works really well. You're welcome. How many ticks are you looking for daily? I try to get 10 points, right? I try to capture 10 points a day unadjusted for size. So if you're doing 10 lots, 100 points. If you're doing 6 lots, 60 points. But I try to get 10 every single day. And especially if there's an opportunity, you could even get more. Some days you get 15, 20 points. If the market's ranging in a 4-point consolidation, you can't look to get 10 points. You got to start out and say, look, it's not going to be a 10-point day, but let me see how many I can catch. So it's a soft target. There's no hard targets in this business. You're going to have variable income. You're not trading to make consistent income. You're trading to make variable income, because on the small days you can make a couple $100, $1,000, whatever you're doing. On the big days you can make $5,000, $10,000, $15,000 if it's a really good day. And so if you're looking for consistent income, then you're cutting off the head of the opportunity. And you got to embrace variable income in this business. So it's all about. But on average, I target 10 points. If I don't get them, I'm not going home to cry. All right, that's it. That's all I got for you guys. Thank you for being on board. I love you all. Thank you for taking time out of your schedules. And great questions. I really love it. You guys are very engaged. We got to use the whiteboard for a little bit. And now I'm going to go clean it and erase it. Look, Justin's getting ready here. Fired up the charts. Say bye, Jay. Woo. What do you got going? Which one are you using? Is that a tick chart?
Yeah.
Range? That's a 10? That's a 5.
That's a 5, this is a 10.
That's a 10. Nice. All right, so check out the mouse pad. Pretty cool, eh? Why did you pin it in? You destroyed it. It's all right, I got another one for you, don't worry. All right, guys, this is us. We're out of here. Take care. I love you all. Thank you for joining us on YouTube today. If you like the Q&A, please hit the like button. I would really appreciate that if you hit the like button, subscribe, and I put the video a link to a video in the description. We're having an order flow. I want to teach you this order flow strategy we use for buying pullbacks. The link is in the description for the webinar. We're doing the webinar tomorrow at 1 p.m. Eastern if you can join. And then we have a replay, but you got to get on the list to get the replay. Love you guys. Appreciate you all. Thanks for coming out. I'll see you later. Hang on, let me extend it more. Let's see how far back this selfie stick goes. Holy crap, that's cool. Whee. I'm dizzy. Bye, guys. Have a good day. Thanks for tuning in. And we'll catch you soon. We'll catch you tomorrow. We're back in the trade room. Peace out. Ciao.